frankly, it appears to me that things have looked up this week. New home sales were up much stronger than expected, 369,000 in May. It's old, it's an old report, but it's the most recent we have. That was up 7.6%. Expected to be 348,000. Prices fell a little bit, but this housing number, this housing issues we're seeing are starting to improve. The Case-Shiller 20 city valuation, where they look at the 20 largest cities in the United States and figure out if the value gone up or down, was up month over month, not greatly, 1.3%, but we're seeing housing pending home sales were up 5.9%. We're seeing permits sharply higher for new construction. It certainly looks like the housing market has at least found a bottom and has started to turn up, not down. There is some shadow inventory that is going to be problematic. In other words, there's more foreclosures coming, but it appears that they're being absorbed much faster, and the inventory of existing homes and new construction has shrunk nicely. I think we're on the right path there in the housing. This morning we had big news out of Europe, well, relatively big news, in which Germany has caved a little bit, agreeing to let the Euro fund, their super fund of 500 billion euros, to be used directly to recapitalize banks in Europe. Instead of the individual countries having to deal with recapitalizing their banks, there was a loop going on there where the debt of the country was already too high, and if they needed to recapitalize the bank, they would have to borrow more money, making more debt, raising their prices of debt to recapitalize their banks, because the banks are hurting, especially in Spain, where they have the same housing bubble that we had, just later. So they're dealing with that bubble in their banks now. Remember how we dealt with it. Our Fed just pumped in the money. Well, they don't have a Federal Reserve in Europe. They have an ECB, European Central Bank, but it doesn't have the authority to do what our Fed can do. So this agreement allows this big, huge super fund to recapitalize directly the banks. Germany agreed to that, which they were opposed to before, if there was going to be a mechanism for oversight. You know, in other words, they wanted a tighter fiscal union, and it looks like they're on the path to that too, because there was agreement to have a banking authority established by the end of the year that would oversee all these ECB, European, not ECB, and EU banking supervision. They're moving toward our Federal Reserve model, is what's happening. They didn't have that before. There was no method of, pumping up money, printing more. They could print the money, but there was no method of interfering in individual countries' financial situations. And it looks like they're moving toward that path. And finally, I want to talk about economic numbers out this week. There was a lot of them out this morning. Income, spending, inflation, all in line. Everything is line. Low, small, but what everybody expected. And the GDP for the last quarter came in at 1.9%, which was expected. So it does seem, and we actually had a pretty good durable goods report out this week. It was up 1.1%. That was much better than expected. And durable goods is a good indicator. What we're seeing is, we're in a soft spot, but there doesn't seem to be any fear that we're going to shrink into a recession. And if we get continued news coming out of Europe that they're at least have a path, that's all we really need, is a path to solve a more Euro-wide issue of debt and underfunded banks, and solve it on our European-wide instead of country by country. We see that path, the market's going to rally. Now, this one-day rally we have today, we've had this short-term rallies from the EU news before. We're definitely not out of the woods. We'll see how this goes.
The Invest Talk Update is a monthly briefing that gives you a snapshot of the past month's market, along with other useful perspective and information. You'll see important articles like Protecting Your Investments Against Scam Artists, excerpts from Steve's book, links to the month's Invest Talk talking points, plus news of upcoming InvestTalk events in your area. And it comes free each month to your email box. To get your subscription, just go to investtalk.com and click on the icon at the top of the page.